Okay. Can you guys see my screen okay?
Yes.
Yeah, it's in yes, it's in computer screen mode, not presentation mode.
Man, this looks a little funky. Let me stop because something's going on here. I cannot see. It's like all of a sudden my screen just kind of went away, and I hate doing this.
It's all right. We all got to do it at some point.
And today is my turn, apparently.
It was me last week. If it makes you feel any better, or the last time we did it.
Okay. Now, I think we got it all, right? You guys can see okay?
Yes.
Okay. Hit record. All right. I think we are good to go. All right. Good afternoon, everyone, and thank you all for joining us for today's A Month of Service presentation of property taxes, exemptions, and payment options. My name is Nia Murray. I am the programs coordinator with Neighborhood Recovery Community Development Corporation, and we are one of the partners in the A Month of Service collaboration. Also included is the City of Houston Department of Neighborhoods, and joining us today, we have Ms. Cecile Carlson. Also, in partnership and for today's presenting uh, uh, partners today, we have the Harris Central Appraisal District, and joining us today, we have Ms. Mabel Menifee, as well as Ms. Donna Pinsky, and then the Harris County Tax Assessor Collector's Office, we have Ms. Shay Pinkowski. But also included in the partnership is the Texas Legal Services Center, the Earl Carl Institute, Lone Star Legal Aid, and the Houston Volunteer Lawyers. And together we all make up a month of service. And basically what a month of service is the collaboration of all of our organizations coming together on a monthly basis, offering a variety of different workshops, information, and resources to the community relative to asset building, asset protection, the maintaining of generational wealth and community empowerment. So today we're going to be talking about property taxes and exemptions and what happens if you need to make payment arrangements and how to avoid um, becoming what do you call it, delinquent on your property taxes and what your payment options are. So we know that that there are a lot of underserved communities that are out there that don't have access to a lot of information, that don't know where to go for available resources. So several years ago, we decided to come together and collaborate, and with the hopes of creating a larger impact and getting more information out to as many people in the community that we all serve as we possibly can. So we had to adjust to the virtual platform. We're slowly trying to get back out there in person so that we can get back out to our local community centers, our local multi-service centers, and the churches and so on and so forth in the community to try to get information to those folks that have that technical divide that may not be able to join us on Zoom or know how to kind of log in and do all of this. But we're doing what we can again to continue to make sure that we get the information out there. This is an opportunity for you all to be as engaged as you like and ask whatever questions that you have related to this particular topic. Do know that the information that is provided is for your educational benefit, and none of the presentations that we offer is to be considered any kind of legal advice. We do encourage you to reach out to our presenting partners if you do have questions about your particular situation. We do have some folks that are monitoring the chat that can address some things for you. but do know that if you choose to unmute yourself and ask your question aloud, that we are on a virtual platform, that we are recording as well as broadcasting live on our social media pages and on YouTube. So we want to try to protect your privacy as much as we possibly can. So we ask that you try to keep your questions to be as general in nature as you can, so you don't divulge any personal detail information out there for everybody to have access to. So do keep that in mind when you are asking the questions. However, again, we do have the professionals that are here that are experts in their area of property taxes and exemptions and the options. So we do want you to ask questions. So with that being said, there's a lot of information that we are going to cover here today. Feel free to come back and join us. We are here the the fourth Wednesday of each month with the property tax presentation. We know policies change, laws change, processes change. So we want to try to get the most up-to-date information out there to people as we possibly can. So you do have the option to come back and join us again in the future. We do record this session and send out a link of the presentation, so that way you can go back and review it. And we do also encourage you to share this information with others that do not, that can find this information to be beneficial as well. Cecile and I were actually out at a presentation yesterday, and we had I know I had somebody that stopped at our table and asked about the property taxes, and people are telling me that they're exempt and they don't pay taxes and they don't pay taxes. So you'd be surprised as to how many people still get misinformation out there as it relates to your property taxes and exemptions and the deferrals and the difference between the two and how those things actually work. So again, we try to get this information out so that we can be as accurate as possible, so that people are not kind of listening to, the street committee, as we call them, and listening to what everybody else has said and what they heard and what they found out on TikTok and all this other kinds of stuff. So well, thank you guys for joining us. We hope that you do get all the information that you need from this presentation. And without further ado, we're going to go ahead and get started with our introductions, and then we're going to move right on in. So Cecile, let's have you introduce yourself first, and we'll move right on in.
Thank you so much, Nia. Thank you for that introduction. My name is Cecile Carlson. I'm an outreach coordinator here at the Department of Neighborhoods with the City of Houston. And on behalf of the City of Houston, I want to thank everybody for being here, both our audience and our presenters, our partners in the month of service. Very thankful for their collaboration. And like Nia said, this is important information. It's information that's coming straight from the source. And definitely when it comes to taxes, we don't want to be playing around with any of that, messing up or not, paying what we need to pay. So let's make sure that we're all squared off and set for this tax season. So I appreciate everybody and the presenters for being here. Thank you so much.
All right. Shay, why don't we have you introduce yourself, and then Mabel, we'll have you introduce, and then you can move right on in. Shay, you there? I know she was having a couple of technical issues earlier. Okay. All right. Well, we'll have Shay introduce afterwards. Miss Mabel, why don't we go ahead and start with you?
Sure. Well, good afternoon,
Okay.
everyone. My name is Mabel Menifee, and as previously mentioned, I'm with the Harris Central Appraisal District. I'm actually in the Public Affairs Department, where we are responsible for providing as much outreach as we possibly can to the community. We do have specialists in each of the various areas as it relates to the property tax system in Texas. So today we're going to review some of the basics, and since March is coming up, it's a really good time to do that, because towards the end of March is when property owners in Harris County receive something from HCAD called their valuation notices. And those come out each year in order to let you know what your market value has been deemed for that particular year. So we're going to go ahead and get started. I kind of want to give you a little bit of background on that, talk about if you disagree with those market values, your right to protest them, and how that all works. And then we're going to go into a little bit about exemptions and the importance of making sure that you have all the exemptions you're entitled to, because that is by far your best way to save money on taxes in terms of what the state of Texas allows. So I'm going to go ahead and that was just up there. Thank you. Let's see. And share my screen. Well, I don't know if I really needed to share. Okay, share. Already up there, Nia. Should I do share again?
Yeah, are you in the Zoom? Then hit share from the
And
Zoom.
let me go to, okay, and then I'm in, uh,
It's loading.
great.
We see your computer screen.
So hopefully that is coming up.
Open yep.
Yep, there we go. And, and how's that?
And swap the display. Yep.
All righty, here we go.
Okay. There you go.
As I said, so just kind of quickly as we move into this, just wanted to talk a little bit, just make sure, I'm sure everybody knows this, but in case we have some folks listening that may have just recently moved here from out of state, one of the reasons that property taxes play such an outsized role in Texas is because Texas does not have a state income tax like many states do, like the majority of states do, and therefore that income mostly comes from either the state sales tax or it comes from local property taxes. And that's revenue that is used to provide the local services that we depend on, such as schools, streets and roads, your police department, your fire department, your fire protection, and those kinds of things. So I also want to add, let's go back to this. I mentioned to you also, you see here in the bottom right-hand corner that property tax laws in the state of Texas originate with the state legislature. They write the laws, and then the central appraisal districts, which there is one in each and every county in Texas, are the ones charged with carrying out the administration of property tax valuations. And then there's the whole point, the piece about property taxes and the collections. And Shay is going to talk a little bit more about that side. I would like to also add that I am being joined today by my colleague from HCAT, Donna Pensick. She's going to be in the chat room and available to answer many of your questions. Donna works on our I guess you could say our customer service desk or our e-bank, and answers questions for property owners each and every day. So she can give you an answer a lot faster than I can. So welcome, Donna, and please feel free to type in your questions in the chat, or at the end of the presentation, the mics will open and you can ask some of those questions. So again, the oversight is the Texas State Legislature, and I just wanted to mention they meet every 2 years, and as you likely know, and they take up issues, they make changes to the laws, and the legislative session is currently ongoing in Austin, and it's going to be running from January the 14th to June the 2nd. It's always a good time to let your elected state representatives and state senators hear from you if you have specific things you would like them to address. I think there is some legislation moving through regarding property taxes where they may possibly be removing or increasing the exemption that you get on your primary property. So we'll talk about that a little bit later, but that may be actually increasing following the end of this session. The central responsibilities of all appraisal districts, as I mentioned, there is one representative for each county in Texas. And while each appraisal district is charged with administering the property tax laws as it relates to valuations and exemptions and the like, there may be some different interpretations of the way some appraisal districts do it. So we're going to be talking specifically about the Harris Central Appraisal District and how we administer exemptions and appraise property in Harris County. So values, again, we are required to appraise at 100% of market value. And we do that each year as of January the 1st. And what that means is your property is valued as of its condition on January the 1st. Something could change on January the 4th or 5th, but the property value, the property as it exists on January the 1st of each year is what your market value will be based on. We also administer exemptions, and as I said, a very important piece for all property owners to know and to make sure that they have the ones that they are entitled to. And then lastly, our primary role in serving other taxing jurisdictions. And when I talk about jurisdictions, I mean the city, the county, all of those folks that you actually receive a property tax bill from. Those are the taxing jurisdictions. We certify the appraisal rolls for those taxing jurisdictions each year. And what that basically is that we let them know they have some idea of the revenue they can expect based on the value of property in the county. And that allows them to set their tax rates accordingly, set their budgets, etc., for the upcoming year. The date of appraisal, as I mentioned, was January the 1st. Another important date you're going to want to remember is May 15th. That's the protest deadline. Remember, I mentioned that we will be sending out the valuation notices in late March. Most likely for the majority of property owners, the deadline to protest, or some might say file an appeal for those values if you disagree or you disagree with what has been assigned to your property by the appraisal district, you have until May 15th to protest that value, or should you receive it a little bit later, and sometimes that can happen, you will always have 30 days from the date of the notice on the letter to file a protest. And then, of course, in concluding what the annual tax property tax cycle looks like, usually you receive your bills in October and November. That's going to be a tax assessor collector thing. We'll discuss it. That'll be discussed after my presentation. And then, of course, if you have not paid those taxes by January 1st, I'm sorry, February the 1st, they become delinquent. So HCAD, in appraising property, we are required by the tax code to try to hit that 100% of market value of your property. The oversight for that, again, is the comptroller, and there is a biennial study that's conducted by the state each year to make sure that appraisal districts are hitting that mark as far as market value. We do so in Texas, in Harris County, by a process called mass appraisal, because there are 1.9 million parcels of property in the county. So there's no way we could appraise each and every one each year singularly. So it's done by a process called mass appraisal, which is a little bit different from what you might get when you have someone come out and do a fee appraisal, for instance, if you're getting ready to perhaps sell your property. The value that these mass appraisals are conducted on, the value is derived based on the sales of similar properties in your area. And again, we are responsible for 1.9 million parcels in Harris County. And believe it or not, we serve around 500 taxing jurisdictions in Harris County. Typically, you're going to only pay for, I'm sorry, you're paying taxes for 4 or 5 of those, but depending on where you live, they will be different. So throughout the county, there are over 500. That includes your MUDs, your school districts, your municipal taxing jurisdictions, and the like. Just as we get into in March, this is what that letter that you're going to be receiving in March looks like. It's the notice of appraised value for property tax purposes. It usually comes every March or April. And this is where you will see what HCAD has determined as your market value. And you're going to also see something called the appraised value. The appraised value may be different from the market value, and that's usually because of exemptions. It's usually going to be lower. It could be the same, but typically the appraised value is based on the exemptions that provide you with the 10% cap and certain discounts on certain types of property taxes. It's important to remember that the appraised value is going to be the one that your taxes are going to be based on, not the market value. Again, used in calculating your tax bills. It could be the same as the market value, particularly for properties that do not have exemptions. But if you do have exemptions, it will usually be lower because of that 10% for a number of reasons, but primarily you are protected from any rapid increases in value, which we've been seeing a lot of that in Harris County lately, but you are protected from that by a 10% appraisal cap increase, meaning that no matter how much your value goes up, you will never be required to pay more than 10% of that increase in value if you have the homestead exemption. The market value, though, is the value which HCAD determines, and it's the value at which a property is going to sell for to a willing buyer on the open market. So our primary role, again, we establish that annual market value. Another thing that it's very important to remember is that when you get ready to protest, the protests are going to be based on that market value and not the appraised value. Certain types of forms that the certain ways that you can protest. We offer a number of options for that. You can do it online through a number of ways. You can also meet in person, virtually or in person, with an HCAD appraiser and talk things through. And if the two of you can reach an agreement and you get your value lowered, then you're done. Then there's the formal hearing with the appraisal review board. You can also do that virtually or in person. You also have an opportunity to choose between a 3-person or 1-person panel when doing those ARV hearings. The important thing to remember is that you have options that you no longer have to come out to HCAD to conduct your protest. You can do those online in a number of ways. And so again, I mentioned for those of you, when you get those bills not bills, but when you get those value notices in March or April, you may want to come back to a couple of the workshops that we're going to be holding in April and May regarding protesting, where we're going to dive in a little bit deeper on how you can do that. And we'll actually have with us on the on the Zoom call, we'll have senior appraisers as well as valuation analysts who can address your specific questions as it relates to protesting and values. So you might want to mark your calendar for next month's property tax presentation, as well as the one in April and May. So you have those opportunities to do that. So exemptions. I mentioned those in terms of reducing your tax bill. So how do they save you that money and how do you get them? They are administered here at HCAD, and they exempt a portion of your property's value from taxation. And that is for your primary residence. It's your primary residence only. That does not account for any rental or investment property that you may have. That is for the house that you own and occupy. And again, these are used to calculate your property tax bill. So what are some of the most common ones and the ones you want to make sure you double check that you have? There's the general resident homestead exemption, and over 65, there's a surviving spouse, there's a disability exemption, there are disabled veterans exemptions, and there are a couple of other service-related exemptions that are available. The general resident homestead, again, is the one that you should have on your primary residence. We do require a little bit of documentation, which obviously is going to be proof of ownership. That deed must be in your name on the home. And of course, we require that you send in, when you make that application for the exemption, a copy of your driver's license. And the driver's license the address on the driver's license should match that of the property. Again, that exemption protects you from rapid increases in property by making sure that it can't go up any more than 10%. Now, if your value goes up 2 or 3%, then it's may go up 2 or 3%. But in some cases where you see property values rising in, hot neighborhoods by as much as 12, 15, 20%, it's never going to go over 10% if you have that general resident homestead exemption. You also are protected by from your school taxes, which are generally usually the largest portion of taxes that you pay. You get that first $100,000 of your value is subtracted before your tax rates are applied. So that first $100,000 in value is exempt, and that's by state law. The state requires that. And you remember I mentioned that there's discussion going on now about increasing that to 140,000. So you may want to stay tuned for that. There are other exemptions that the various jurisdictions might offer for the general resident homestead exemptions, such as Harris County offers certain exemptions. So does the city of Houston. Perhaps some of the other special districts that you live in might also. So those are things that you can check on your account. The over 65. This is in addition to the general resident homestead exemption that you may have had before you turn 65. But once you turn 65, you are eligible by merely filling out and sending in that application. You're eligible for additional benefits, and you qualify for that for the entire year that you turn 65. I do want to point out that the over 65 exemption and the disability exemption are pretty much the same. Disability meaning that someone who is disabled, unable to work, and they receive disability under Social Security, or because their doctor has deemed them unable to work, can qualify for the disability exemption. You simply need to provide proof either from the Social Security or by filling out a specific physician statement that HCAD can provide you to either your doctor filling that out. So what are the additional benefits for the over 65 exemption? You get a school tax ceiling freeze. In other words, either you turn 65, whatever taxes you were paying on your school taxes is frozen at that amount. It will never go up. It can go down if the value drops, but it cannot go up unless you make major improvements to the property. And we're not just talking about maintenance, but say you add an additional room, you've added square footage, or you build a swimming pool. You've added that additional value to the property. So your value will be reset to reflect that increase in value, and then the freeze will then kick back in. The other exemptions granted to, again, you still keep all your general resident homestead exemptions, and then you're also eligible for certain privileges or opportunities to save money through having a tax deferral, or you can pay taxes in installments without penalties. And Shay's going to talk about that a little bit. Those are administered through the tax assessor collector's office once you have your deferral on file with HCAD. Again, there may be other exemptions that various jurisdictions offer for over 65. And that's why I always we often tell people, when you're searching, if you're out there and you're planning on purchasing a house, you're searching for areas of town where you might want to live. You might also want to check what the various taxing jurisdictions are and what their rates are for whatever area you're planning to move into. That can often be a critical factor in making sure the home is affordable. The over 55 survivors exemption simply means that if one of the spouses qualified for the over 65 exemption, and they pass away, if if the surviving spouse was at least 55 years of age or older, he or she are able to just continue on with those same exemptions. And so those are the kinds of things that are available for as long as the surviving spouse is at least 55 years of age. So there's no interruption in any of those exemptions. I do want to talk a little bit about the heirship exemption, because we have some folks out there who may not be aware of it, or don't understand how they can qualify for it. It is actually on the exemption application on section 3. There's a question that says, is the property for which this application submitted an heir property? Because remember, in most instances, you need to own the property either in order to qualify for the exemptions. But in some cases, some people might be living in a home where there was no clear title passed to one individual. Instead, it may be owned by several brothers and sisters, several siblings. We call that heir property. And in previous times, individuals who lived in that home, and maybe they were living there all alone, their siblings were all enjoying their own homestead exemptions on their property elsewhere, but because that person did not own it outright, they weren't eligible to receive, or were eligible to receive only that portion of ownership. If there were 4 siblings, say, they were only eligible to get 25% of that of the exemption because of that. However, a recent change in the law actually lets individuals who are living in the property obtain a full exemption, but it takes a little bit of extra work. And you'll see that when someone is filling out section 3 on the homestead application, and it asks the question, is the property for which this application submitted an heir property? And if you check yes, and if you check yes that other heir properties can actually own the property, live on the property as well, you can check yes there as well. But so then we will require some additional information, an affidavit establishing your interest in the property. We're going to need a death certificate for the previous owner. We ask for a copy of the utility bill just to make sure the property is being lived in, and then any citations of court records for the applicant for your ownership interest in the property if they are available. So the question here is, how do I, if I'm in that situation where I'm living in the property, but I don't have full ownership because my parents left it to my other 2 siblings as well, but I'm living here, and you still have questions, please feel free to call HCAD in our exemptions department, and our staff there will be happy to walk you through that process, because this is this affects a lot of people in Harris County as well as in other counties. So please feel free to ask any questions about that. The immediate resident homestead exemption. This is for folks, again, if you're out there listening because you're considering purchasing a home in the near future. This is, you remember I said earlier that January the 1st is kind of the magical date in terms of when HCAD begins valuing the property, or what that means for HCAD. Well, that also used to mean that whenever you bought a property, you weren't really eligible to begin receiving the exemption till the following January the 1st rolled around. Well, that piece has changed recently, and you can now apply for something called the immediate resident homestead exemption, meaning that you qualify for it as soon as you move in, the date that you move in, and you will start receiving the exemption on a prorated basis from the date that you moved in. You do need to apply for that before the 1st anniversary of the date you moved into the property, otherwise you would not qualify. Now, and a couple of other things to remember with that IRE is that if the previous owner had exemptions, or or the home was never occupied, then that's when the first year again is the prorated exemption. And the second year is when you get the full exemption for the year, and that's when your cap rate eligibility base year begins. Also important to remember is if the home was previously owned and that owner was receiving exemptions, that previous owner's exemptions will remain on the property for that year. So basically, IRE is for new properties as well as properties that may not have had an exemption before, such as maybe it had been a rental in the past. But the previous owner's exemptions are going to remain on there for the remainder of the year. So in some cases, let's say, just kind of remember, maybe you purchased a home, maybe you're around 30 years old. You purchase a home that belonged to a couple who was over 65. Well, that first year, you're going to get their full over 65 exemptions. So the following year, once your eligibility kicks in, your tax bill may be a little bit different, probably a little bit higher, because you were enjoying that person's exemptions. That's not always the case, but it has been, it could be. So keep that in mind as well. You get, if it's new, you're going to get those exemptions. If it's new or was a rental, did not have a general resident homestead on it, you'll get the immediate homestead exemption prorated for that first year. If not, you'll enjoy the exemptions that were already on the home. So, I do have the slide here that's a temporary disaster exemption, but that one is really void for right now, and hopefully will be for this year. It was available for folks who had damage from the derecho or some of the flooding in the past. If it meets that 15% of damage to your house, there is a deadline for applying for that temporary disaster exemption. So I mentioned this in the event, and I will knock on wood here, that if we have another disaster, which the governor declares it so, you have 120 days to file for a disaster declaration. And just kind of keep that in mind, which gives you an opportunity to make sure you think about that in terms of should there be another disaster. But we're gonna move on and not talk about that. Hopefully we'll get a break in 2025. Now, one thing I did want to mention, because a lot of people get these two things confused. The exemptions are a discount on your property taxes. Discount means you get that discount. You don't owe anything. You're just getting a discount. The deferral, which you're going to hear a little more about in a little bit, is you're simply deferring the taxes, and they will come due at some point, although under much more favorable interest and accumulation conditions and such, but they will come due. So it's important to remember, and I mention this because sometimes there's a lot of confusion out in the community about what constitutes an exemption and a deferral. And some people think, well, if I get those exemptions, we've heard this before, then my family will have to pay that back. That is not the case with the exemptions. As long as you were eligible for those exemptions, then no one has to, then they don't have to be paid back. Okay, how do you receive the exemptions? Very easy. We have paper forms that you can mail in. You also, depending on make sure when you send those in that you send everything that's requested in, so you don't get a delay in the processing. And once we do apply those, we'll let you know. HCAT will notify you. If you're still confused, there's also, you can go out online on our website. There's actually a how to fill that out video that's online that you can actually play as you go along as you fill out the form. So Those can be found at www.hcad.org. Now, this one, moving on to this, there has been some confusion in recent months about the state law that was passed at last legislative session that appraisal departments are having to scramble to figure out and how they're going to do this. But the requirement was that every 5 years, property exemptions had to be requalified. Or in other words, the law was kind of vague in terms of how appraisal districts needed to make sure that they did this, but for every 5 years, the state wanted appraisal districts to make sure they double check that people receiving these exemptions still qualified for them. Here in Harris County, HCAD for a long time has been sending out this annual confirmation card, which you may recall seeing. It's a postcard that comes usually in December or early January that lists the exemptions that you're receiving. And it says you need to notify us in writing if the eligibility for any of these has ended. For instance, if the property owner to whom they are assigned has passed away and someone else is living in the house, they need to provide that new information. They can go back as far as 5 years and collect back taxes.
Miss Mabel, I'm sorry, I hate to cut you off, but I wanted you to really reiterate on this part right here because there have been so many videos circulating out there on Facebook and TikTok and Instagram about people's exemptions falling off after 5 years. They're just going to go away and you got to reapply all over again, or you're just going to lose that exemption. Can you please reiterate that part one more time for everybody to make sure that they get an understanding that their exemptions don't automatically go away, that they don't have to reapply after 5 years. That is not accurate.
That is not accurate. That is speculation. There may be some counties, we don't know how each and every county in Texas is going to go about fulfilling this new law. However, in Harris County, we've deemed that this annual confirmation card that you receive each year, that you then are responsible for responding to HCAD if anything has changed, that is our system of verifying homestead exemptions. So we will not, we do not have to do any of that. This is our system, one that we've had for a number of years. When you receive this card, one thing you might want, well, when we send this card out, when HCAD sends this card out, usually in December or early January, these cannot be forwarded. So if it comes back to HCAD, that is how the district knows that they may not be eligible for these exemptions. The homeowner, whoever lives at this residence, may no longer be there, may not be eligible. That is when we will normally make 1 or 2 attempts to contact that person, and if not, that is when the exemptions could be removed, because this card has been returned, which is part of our verification process that for whether or not you're still eligible for the exemption. If by chance you don't remember, and again, I mentioned that these cannot be forwarded. So if by chance you don't remember receiving this in a given year, end of the year, early January, then you may want to call, or you probably should give HCAD a call and say, hey, I'm still here. I don't recall receiving the card. Just want to verify what my exemptions are. Feel free to do that, but you are not going to lose your exemptions after 5 years if you don't do some sort of process that really hadn't been spelled out for a lot of folks. But here in Harris County, this is the process. So you will not be losing your exemptions again unless this card comes back to HCAD and we're unable to verify that you still live there, and then they may roll off. So hopefully Is that kind of, Nia, does that kind of explain it? Have I left any holes? Nia, just, anyway, that is how the exemption verification process works for Harris County residents. And let's see, if I can go back to, I'm gonna go, let's see. I think for some reason my screen has frozen. Ah, here we go. Again, I've been talking in terms of if you need to contact us. Here's what our web landing page on our website looks like. We're at www.hcat.org. Again, we have a number of, like you'll see on the second blue line, if you want to do a property search, you can actually go out there and check on whether or not what your exemptions you have. You're going to see the residential homestead exemption. And if you have an over 65 or a disability or exemption or another exemption, it's not really going to say what that is on the on this public website. It's just going to say residential exemption. Then it will say multiple, because we don't want to go out there telling people on this public website that there's a person over 65 who's living in the house, or a disabled person living in the house. That is confidential information, but you'll know that the additional exemptions are applied by the word multiple. And then, of course, if you have any questions, you can still give HCAT a call. Also under forms, most of the forms that you will need for HCAT are here. Some of them are actually printable, such as the exemption one, fillable online, and you can send in and just simply upload a copy of your driver's license. The others include various services. If anyone's looking for a job, HCAT tends to be hiring frequently as well, so the careers are out there. And then we have other helpful videos that explain various subjects as well. If you want to contact us directly, again, we're out here on Northwest Freeway at the Hollister-Tidwell exit, but you don't have to come in. You can give us a call, or you can you can set up an online account and email us all of your questions, or again, questions are answered. A lot of questions are already answered on our website. So that's what I wanted to get across today in terms of HCAT and where we are, how we fit into the property tax system in the state of Texas. I'm now going to turn it over to my colleague at the Harris County Tax Office, Shay Pentowski, and she is going to talk a little bit more about the collections and billing side of it. And again, if you have any questions, my colleague and I, Donna Pensick, and I are here in the chat. Thank you so much.
Thank you, Ms. Mabel.
Thank you, Miss Mabel. Can everyone hear me okay now? I was having some difficulties earlier, so.
Yes, ma'am.
Yeah.
Perfect. Fantastic. Hi, everyone. Good afternoon. My name is Shay Pentowski, and I'm here with the Office of Annette Ramirez with the Harris County Tax Assessor Collector. I am bringing up my presentation now, so if you just bear with me. Can everyone see everything okay?
Yes.
Wonderful. Alrighty. So this year, we've just had our new tax assessor collector brought in. So we have a bit of information about her. Her name is Annette Ramirez. Our previous tax assessor collector was Miss Ann Harris Bennett. And now we have switched over. We are currently, everything has been switched over as far as documentation purposes. Before she was elected, she has a lot of experience in the legal side of collections for property taxes, because she was on the legal counsel for Aldine Independent School District for over 20 years. So we do have some information here in reference to her, just so that we can get to know her a little bit better, as she is the brand new tax assessor collector. We have a lot of jurisdictions that we collect for as Harris County. We collect for over 75 jurisdictions, as well as maintaining vehicle registration renewals, title transfer information, and voter registration. So there are a lot of responsibilities that fall to her. We're super excited to have her, and changing and things coming about new, but a lot of things stay the same. So we're going to make sure that everyone is being taken care of and your questions are being answered. So as we've mentioned before, if you have any questions for me through the presentation, it's just me today. So I'll try to get out to all the questions at the end. But if you have any questions and you'd like to put those in, we'll come back around at the end of the presentation and I'll be able to answer any questions that y'all might have. So just as an overview, the Harris County Tax Office maintains about 1.7 million accounts and collects over $8 billion in taxes every year. We disperse to more than 80 jurisdictions, which are the entities that receive the property taxes for multiple services and public services that are provided to us as a community, such as your schools. We collect for Harris County, Houston ISD, and the City of Houston, along with our flood control district. So whenever you see our bill, just know that the reason that you're receiving that bill is so that we can continue receiving those public services that we as a community use and need. Just for general knowledge, the way that we calculate your tax bill is by using the appraised value that's determined by the appraisal district that Ms. Menifee was just explaining to us earlier, along with the tax, by multiplying that by the tax rate, which is determined by the jurisdictions, which are the entities that collect property taxes that we collect on behalf of. And by using that information and that equation, we determine what your tax bill is. So that is how we determine every year what your tax bill is. Each jurisdiction works independently, so you won't have the same exemptions for every single for the whole of your property tax. However, every jurisdiction has their allowable exemptions, which are determined and then communicated to the appraisal district, and they give us that information so that we can collect the correct amounts for your property taxes. We've had quite a few changes recently, including some increases to exemptions, which in turn reduces your bill due to that exemption increasing from $275,000 to $320,000, which for our over 65 homestead or disabled persons in their homestead is a great help. And those are to all of the Harris County taxes. So that's your Harris County, flood control, Port of Houston, hospital districts, et cetera. The City of Houston has an increase as well for our over 65 for our over 65 homesteaders, from $160,000 to $260,000, which again helps in reducing your bill. And as Ms. Menifee mentioned earlier to us, the prorated start for your property taxes whenever you move into a new home. So as opposed to prior year or previously when you would be required to live in the property for a full year before those homestead exemptions take into effect, we're now able to start those with prorated with the appraisal district. So they start based on the day that you acquired that property as opposed to having to wait for that full first year. In addition to that, we also had last year the increase of the homestead exemption for your school taxes from $40,000 to $100,000. So a lot of folks saw a really big difference in their property tax bills due to that, and there were, it was a pretty big drastic difference. So we had a lot of folks calling in like, I'm not sure if my bill is correct, I want to make sure. And yes, that homestead exemption for your school district, your ISD, really did make a pretty drastic difference with your school taxes. We also had some infrastructure changes when it comes to structuring for your school tax ceilings, which due to compression made it so that it also assisted in reducing your tax bill due to that tax ceiling increasing. And essentially what that affects too is when you have a tax ceiling in effect on your property, if you're over 65 and you've lived in the property for, however many years, your school tax ceiling would have stopped your property taxes due to your school, to your ISD, from exceeding past a certain amount, which would have been the year that you turned 65 and had that exemption added and applied to your account. What the compression did is it increased that ceiling, meaning that unless your tax bill was above that amount, you would not be paying past that amount for your property taxes. So due to that, a lot of over 65 homestead folks also saw a pretty drastic difference in their school taxes. But, we're happy to say that it did reduce tax bills for a lot of folks. And that was this 88th session. Let's see here. We have a small visual here of your tax bill and what you can expect to come to you here in the mail starting about October, November of this 2025 tax year. And what you're probably already seen from this past January and what you're used to seeing. This bottom part of the actual bill itself can be removed as a perforated edge, and you can submit that in with your payment either by coming into a branch office or sending it to us in the mail. And whenever we receive that information, all of your property information is on that form. So we are able to correctly bill and make sure that all of the information is correct. And it also has, the information to who to make the check payable to and where to mail that payment in. So all of that information is at the bottom of every bill that you receive, and it is about what you would be expecting at the end of this year as well. We have a visual of the exemptions and how drastic the change is between having no exemptions, having a homestead exemption, and then having the homestead and the over 65 or the disabled exemption on your property. And as you can see here, just in the reference of a home with the $320,000 value, and then the difference between your tax bill without any exemptions, which is approximately $7,153, compared to with a homestead, which would be about $5,323, and then comparing that to how drastic the difference is whenever you have both the homestead and the over 65 exemptions on your property. So we cannot impress enough that it is so important for you to go and make sure that you're keeping up with your exemptions. If you are living in that property and it is your homestead and you are over the age of 65, or even if not, that you go forward and apply for those exemptions, because all it is doing is saving you money. This is not money that you would pay back. This is not money that you would owe at a later time, or if you decide to move. This is a reduction to your property tax value, to the property taxes that would be collected for your yearly tax. So can't impress enough that how important it is to go forward and make sure that you're getting your exemptions as you should be getting them. I mentioned earlier a tax ceiling due to the compression that we had this past 88th session. You'll hear the words tax ceiling or tax freeze. All in all, it does limit the increase of your taxes for your school. And for some jurisdictions, not all property taxes, this isn't going to affect every single jurisdiction that we collect for, but some do allow for something called a tax freeze or a tax ceiling on properties, on homesteaded properties of those over 65 years or disabled folks that in their homesteads. These tax ceilings or tax freezes limit the amount that you would be collected for on your property taxes. So, property taxes, say 10 years ago, were a pretty drastic difference compared to what they are now. The tax ceiling allows you to pay your property taxes based off of whenever you originally got that exemption, as opposed to as they would be now. So while the math that I gave you earlier might not make sense, knowing that you have a tax ceiling or a tax freeze might make a little bit more sense to those folks out there who prefer to do math and understand why the tax bill is the way that it is. It is something that we're able to assist you with and looking at, but that is where that difference in value comes in. So if you have a tax ceiling or you have that over 65 exemption that you've had for a while, you might be used to seeing your tax bill a certain amount every year, due to the fact that normally, should we go through the calculations in our normal way, that bill would be drastically higher than what it is showing on your bill. And that is due to that tax limitation. We offer quite a few forms of payment for payment planning. We have a payment arrangements that you can set up with us. We have anything ranging from 12 to 36 months for our homesteaded properties. This is something that can be paid off early. So if it's one of those things where you know that you're not going to be able to pay it off within that first month of January, that is perfectly fine, where we understand that. we always recommend, if you have an amount that you can pay by January, to go ahead and do so. And then whatever amount is remaining afterwards will have penalty and interest for the account, but it would be at a lesser amount if you make a payment prior to the end of January. Because anything you make prior to the end of January, even if it's not a full payment, would still reduce your bill, and that way you pay less in penalty and interest that way. But our payment agreements are great because they help you avoid collection efforts, they help you avoid foreclosure actions, and it is something that you would have on record so long as you continue to make your timely payments, that you're making a good faith effort to continue to pay your property taxes. So long as the payment plan is enacted before your collection fees begin, there wouldn't be any collection fees on your property taxes so long as you create that payment arrangement with us. And that's something that you can either call in. We have a system on our website where you can reach out to us there. And alternatively, if you'd prefer to reach out to us in email, you can do that as well. There is something called a tax deferral, which Ms. Mabel explained to us earlier. And that purpose of a tax deferral is to assist and postpone the property tax payment for those who are over the age of 65, or disabled homeowner or disabled veteran who live in their homestead. And we like to call it something of an insurance for yourself, meaning that you could be the type of person who prefers to pay their property taxes timely and make sure that they stay on top of it. And, every year you pay your property taxes timely, and that's fantastic. We absolutely love to see it. But in order to prepare for, anything that could happen, whether you be out of town during that time and you miss your bill, whether the mail gets lost or stolen and you don't receive your tax bill, anything that could cause you to normally be late in paying your taxes. When you have a deferral on your property, that assists in reducing the amount of penalty and interest that you would pay. So instead of paying our usual 7% in February, 9% in March, 11% in April, you would pay a 5% interest fee per year. And that turns into about 2%-ish, less than that, per month. So all in all, it is something that we recommend for those who are eligible for that exemption to go through with the tax deferral as well. You are more than welcome to make your payments timely. There is nothing that is going to cause you to not be able to pay your property taxes, but it does help in cases where, for one reason or another, you are unable to make your property tax payments. So that is something that you can apply with through the appraisal district. And only notation that I would make sure that everyone is aware of, when you go through that deferral, any payments that are still due, whether when you sell the property or you're no longer residing in that property, any property taxes that are due and on that property that is deferred is going to be due to the amount that it is on there with that 5% for the first 181 days after the deferral is removed. Once those 181 days are up, property taxes are due with regular penalty and interest for the time that it's accrued in from the date that the person is no longer living there. So, it is something that you want to discuss with your loved ones or whoever you anticipate to receive the property after you are done, or if you decide to sell the property that you've lived in since you were 65 and then some. It is something that we recommend that you discuss with them. And if you have a mortgage company that is still on your property, that you would consult with them as well, as some mortgages do not allow for you to have the deferral on your property taxes. So it is something that you'll want to confirm with them beforehand. All right. So I mentioned our payment plans earlier, and these are the options that we have for homesteads, which are the properties in which you own and reside, versus others, which would include businesses, non-residential properties like land that are not connected to a homestead, and personal properties. So, business and cars and vehicles of that nature. For homesteaded plans, we're able to offer extended payment plans, anywhere from 12 to 36 months. The general homestead exemption does need to be on the account in order for us to be able to apply it this way. It is a 1% interest per month plus the initial penalty month. So in this case, for February, if you were to create a payment plan with us now for a general homestead payment arrangement, it would be the usual 7% for the 2020 for the payment arrangement, and 1% interest per month, as opposed to 7%, then 9, then 11, as I had mentioned earlier. You can use this for current and prior year's taxes, meaning that if you still owe taxes from 22, 23 forward, then you're still able to apply for that payment arrangement. We will combine all of the amounts into one payment arrangement and have your payments be including for that penalty and interest for those previous years as well. Due dates for all payment arrangements are at the end of each month, and we go to our non-residential homestead properties. And non-residential homestead properties, we are not able to allow for the extended payment plans. We can go up to 12 months, and you do accrue your usual penalty and interest fees as you would even if you were not on a payment arrangement. However, as I mentioned before, what the payment arrangements do is help you avoid foreclosure action. It helps you avoid attorney's fees or legal action whenever you're going through that process of making sure that your payments on your property taxes are being maintained. Again, you can use this for current or prior years. You're not required to do it the year of, or you're not required to do it for only 1 year at a time, rather. And again, payments are due at the end of each month. You are required to upkeep your payments, meaning that you are required to make your payments in the minimum of your payment agreement. You're able to pay more and pay it off sooner if that's what you would prefer to do. We have absolutely no trouble with that, no problem. There are a lot of folks who would prefer to just pay it off over the course of a couple of months instead of over the full year, if anything, to avoid that additional penalty that would come from the 1% interest per month. So it is an option for you if you'd prefer to do so that way. It's not written on here, but in order for us to be able to continue with your payment agreement, say you create a payment agreement for 2024 this month, and next year, in January, when your 2024 taxes would be due, or 2025 taxes would be due, you're able to make those payments separately. So you would be able to pay for your 2025 property taxes and then your 2024 payment arrangement. However, we would not be able to add the 2025 taxes to your previous year's payment arrangement. You would have to complete one before starting another one. And that is something that you would be able to do by contacting our office as well. We mentioned before that there are, or rather, Ms. Mabel mentioned before that there are options for paying your payment arrangements without penalty and interest fees, and that is available for our over 65 disabled and disabled veteran homestead properties. And this is something called a quarterly payment plan. It's not a monthly payment arrangement. It is for those who are able to make their payments in 4 equal payments over the course of the first couple of months of the year. So first payment starting in January, your second payment due in March, third payment due in May, and the fourth payment due in July. But you can include these for all taxes for this year, and then or for the year in which we're collecting those property taxes. And if paid timely, you would pay no penalty, no interest. It would be the base levy and then divided it by 4, and it would be those 4 equal payments. You do have to contact our office in order to have that approved, but it is something that we are able to do for those over 65 disabled or disabled veteran homeowners. So, please feel free to give us a call if that's something that you might be interested in. I'll put my contact information there at the end if you'd like to reach out. We have multiple payment options as far as methods of payment that we are able to receive. You can go online onto our website to make your payments. We can also accept payments by mail by submitting in a check or a money order along with that coupon for your property taxes, or if not, then the account number and the address of the property in which you're trying to pay. And you can send that into that P.O. box that's written there. We also have a phone method that you can contact us. It's not going to be with a direct person. However, it would be with our automated system, and you can make your payments that way. Or you can come into any one of our branch offices or the downtown location if you'd prefer to come in person and make your payment either by cash, card, or check. You're able to come in during our regular business hours. Now, whenever you're making your property tax payments, it is something that you'd like to make sure that you're aware of, that there is a 2.45% fee when you're paying with any form of card, whether that be debit or credit. And that is something that is collected for the banks in order to be able to process that payment on a card. So if you would prefer to avoid that fee, you can pay with a check, you can come and pay with cash, or if you prefer to pay online, you can pay with something called an e-check, and that e-check assists in avoiding that fee because it would take it directly out of your account as opposed to by the card. As I mentioned earlier, our contact information is here on the screen now if you'd like to take a screenshot, if you'd like to take a picture of it. But, please feel free to give us a call, contact us. Our website is here, www.hctax.net. And of course, we are here to help. So if you have any questions, I'm checking kind of regularly in the chat, but I'm not seeing anything that I can answer at this moment. But if anyone has any questions that they'd like to ask, I'm here and willing to assist whenever you're ready. But aside from that, I think I am about set. Miss Nia?
All righty. I'm going back through the chat here, just looking to see.
Just
There
in
was a
case.
question. I'm sorry.
Oh, no, I was saying just in case. Go ahead.
There was a question here that says, if my father stays with me and 65 and disabled, but not on the mortgage, do I qualify for the exemption?
So I think
Ms.
Miss
Mabel?
Mabel answered that earlier, but no. So he would have to be the property owner in order to qualify for that exemption. Just because they live in that home, it's not theirs by ownership, so it wouldn't be applicable.
Yes, exemption. Okay, and then you know what? And then I had this, and Donna, you could probably chime in if Miss Mabel's not available. If even if he were half owner of the property, or his name was on there as owner, because she is not 65 and he only owned half the property, then they only would get the exemption on half of the value. Is that correct?
Yeah, I don't, Shay, if you want to answer that, but yeah, so when it's a 50-50, the exemption that would be granted in her father's name would only be granted that 50% allowance benefit for his portion of the over 65.
Mhm.
It's only like a community property married couple where it's 100%. And
Right.
then I was also going to mention just the fact that you can either have a disabled person or an over 65, but not both. So,
Okay. Um, what did you say there? Unless someone qualified for the airship exemption may only be granted to the named property owner unless someone qualified for the air exemption.
well, I was just meaning it had to be an owner or like an heir, that if they qualified under the airship qualifications.
Got it. There was a question that was emailed to me earlier, and I wasn't sure. Maybe you guys will understand what this means. Um, they had questions about what is an HCID 10 appraisal roll?
So what that sounds like to me is that maybe there was some kind of a correction on the account that was submitted in on an HCAD roll. That's just what it sounds like to me based off of what I've heard. But whenever a property undergoes a change with exemptions, like say you had someone over the age of 65 living there previously and the ownership changed to, their children, and that child is not over the age of 65, and, those exemptions get removed, all of that information that HCAD gets and applies to the property gets sent to us in something called an electronic tax roll. And that tax roll they're numbered. So every year they start at 1 and 2 and 3, 4, and they keep on going as the corrections come out. But those correction rolls are how we determine when the correction information was sent to us, as well as when those corrections are going to be applicable and applied to the account, to where whenever you look at your bill online, it shows you what the amount is. So, for example, the one that occurred in February would have been the 7th, if I recall correctly. While HCAD sends us that correction on the 7th of February, our office does have to go through and process those changes into the system. So our systems take about 4 to 6 weeks from that roll date to process and submit that information into the system to where your bill will reflect that information. So while HCAD sends it to us, February 7th, on your bill, it's not going to reflect until probably, mid-March.
So,
Okay.
yeah, I was just about to jump off. And
Thought
that
you were gone already. I know
I
you
know
said you
I
needed to
should.
leave early.
But when you said the HCID 10, I a bell rung. So it sounds like everything Shay said is correct, and that's how the system it follows the system. But what this person is probably referring to is that there was, when she said HCID 10, there is a new jurisdiction that was established in a certain neighborhood, and the HCID 10 stands for the Harris County Improvement District number 10, I believe. And for whatever
Okay.
reason, we have to send out to all of the residents in that area, that possible area of taxation, a correction notice on the appraisal roll. But if you are a homeowner, what that improvement district is simply a taxing mechanism, not for homeowners, but for business owners
Businesses.
in the area. They're going to be the ones that will be opting into that improvement district in order to, it's just like what you see over in the Galleria, where they paid for all, the business owners paid for all those things hanging over the street and sidewalk improvements and things that your taxes would not normally pay for. Business owners are actually in a special taxing district to pay for some of the improvements that you normally wouldn't get or wouldn't get right away from city or county appropriations.
So is a
So
management district and an improvement district the same thing?
there are some differences, and I really can't speak to what they are, but
Okay.
in other words, those when that when that homeowner sees their bill, that might be listed as one of the jurisdictions, but they are not going to have any charges for that.
Gotcha. Okay.
And now with that, I'm thank you. I'm out. Thanks.
Thank you, Mabel.
Thank you, Miss
You're
Mabel.
welcome.
All right. There was another question that I had that had come up when we were talking about those exemption cards. So say for instance, somebody's out of town, mail gets mixed up or whatever, the card comes back. That notice that comes for the exemptions, and the exemption does come up. What is the process for getting it back on if it just so happens to have come off because the card was returned or somebody didn't get it or what have you? What's the process then?
Yeah, I kind of wanted to jump in when Mabel was talking about it because I deal with it all the time. But at the end of the year, we send those postcards. And so sometimes inadvertently, the post office just sends them back to us and returns them and in error. But sometimes it's not an error. The person's moved or there's a forwarding address. So we get it back and we do send out a letter and explain what we need. And sometimes people don't realize or they didn't see the letter and it gets removed because by law, we have to make sure they're eligible. That's where that 5-year law came in, there were some appraisal districts that weren't doing it at all.
Mm.
Do it every year and have been doing that. So we always check, we have so many parcels, but if you get the little postcard, it's tiny, you don't do anything unless, you need to apply for an exemption or something. But that lets you know everything's good, and then if not, then we send the letter because we have to remove them if we don't get your requalification that you're eligible to keep those exemptions. So they would have, then what would happen, I always direct them to apply for it, just like you use the 1113, but I always tell them to, put in there in section 5 or somewhere, please reinstate, please reinstate my exemption. Now, most of the time the exemption will catch that you're saying that you owned it since 2019 and you occupied since 2019 because we have those dates in there. Don't want them to miss it, that you're basically, this is still my homestead. So you just, yeah. So it's basically sending in the application, your driver's license, and saying, please reinstate, because that confirmation card got returned. So we just need to make sure by law that they still qualify.
So if it does so happen to come off and then they have to get it reinstated or have to reapply again, is it possible that their exemption will be reinstated from the date from when they actually had it, or could it be reinstated with the tax value at that particular time?
That's why I always tell my property owners, please reinstate, because now if you have waited and it's way past, say, we can accept late applications for 2023 now and forward. But if you didn't realize it, I've had people where, it's been years that it's come off. Didn't know. It's not many when you compare to 1.9 million parcels.
Right.
But saying, if it's in 24 and now you're realizing your tax bill doesn't show your exemption applied, how come I don't have my exemptions? And then I would share with them, well, it had to be removed because it was returned confirmation card and we sent out a letter on this date. So what I need you to do is send an application, put on there, please reinstate. And you're going to also put on that second page, there's dates. When did I acquire the property and when did I begin to occupy? And that should be a signal to the exemption department, oh, it's a reinstatement, right? And so, yeah, that way, when you say reinstatement, they don't lose their cap. And the exemptions are reinstated as they were on the account to remain going forward.
Good. Okay. Yeah. So, but definitely reach out and communicate. No, don't just let the card kind of go sitting or let the letter sit to the side thinking that it's something else. Then definitely call. So cool beans. Or even if they're not sure, can somebody just call and say, hey, I just want to double check, make sure my exemption is still on my account. Can you verify that over the phone with somebody?
I get emails all the time that I pull, and especially with that new law, and people are like, do I need to reapply? Am I going to lose my exemption? One lady, she had her exemption since like 2003. And, but she didn't know that we do it every year. The appraisal district has been doing that every year. In other words, making sure that you're eligible with that confirmation postcard. But oh yes, you can definitely email us or call in, and you can see on your account if you go in property search. And I always tell them, go property search, classic, and go to quick search. And when you pull up your account, you'll see the column exemption type, and you should see your exemptions listed. And you should see the column posted with your exemption value. And I'll let them know, that lets you know that they're active. And also be sure at the end of the year, you see them applied to your tax bills. That way.
I'm sorry, go ahead.
That way they know that their exemptions are active, and then they see it applied at the end of the year to their taxes.
I thought there were certain exemptions that you weren't able to see online for security purposes.
Oh, I explain. You'll see residential and you'll see multiple. And
Okay.
basically, it's for the over 65 and disabled because there was a law in 2015 that we were not able to put anything on the public website that may indicate a person's age, you know, for safety reasons. So that's why multiple would either most of the time be your disabled exemption or your over 65. If it's a veteran exemption, it's going to be listed, you know,
Okay.
like VA or whatever. Yeah.
But double check if you're not sure. So for those
Yes.
folks that are watching, double check if you're not sure. All
Yes.
right. There was the other question that I had about the for exist for home buyers that purchase and there's already an existing exemption on a property that's previously lived in. So Miss Mabel was saying that the exemption stays with the property if the property owner doesn't file for a new exemption. So say it's an over 65 exemption. So that 65 exemption stays with that property until the following year.
Okay, there's so many variables that
I,
come
I
in.
know that's why I kind of wanted to that it's not just a blanket kind of thing.
It really upsets me sometimes because, and it's not any fault of their own, but like sometimes title companies don't know to ask when they're doing the taxes at the closing, are you going to be applying somewhere else for your over 65? Because if they're going from one house in Houston to another, we may prorate it off and then grant it over here, which creates an extra bill for the new owners.
Mhm.
But in answer to your question, so I bought this was just, it was granted, I mean, the law was passed in 2022, and it was to help new homeowners that purchased a property after January 1 in that year if there was no exemptions on the account from the previous owners. So I'll tell, you know, like say they purchased a property today and there is a homestead exemption on it or an over 65, it actually, when we change the ownership, they should remain for this year and they're going to be removed next year. So if that person bought a property today and there's no exemptions on the account, they have 1 year from the date of their purchase to apply in 2025, and that's where upon approval, they would get that IRE partial exemption granted, prorated on as the date they owned and occupied. And then the next year, like Miss Mabel said, that would become their cap base year, because some people get confused on that. But it's just to help property owners that buy a property in a year where there's no exemptions on it. So they only have a year, though, to apply from the date of purchase for that they call it an IRE, immediate something exemption.
So that cap actually starts at that year.
No, cap starts the next year.
The cap starts the following year, not at the amount that they actually purchased it for.
Okay, the cap has to do with having the homestead exemption on your account for the entire year for 2 years. So I'll have people that say, you know, my account didn't cap from last year and I had my exemption, but it was an IRE exemption. And I have to explain the cap begins the year that you have it for the full year going to the next year. So the cap happens on the appraisal value, not market. So whatever your appraisal value is from that year going to the next year, when you've had the exemption for 2 consecutive years, it cannot go up more than 10%. Market can go up as high as the market value goes.
Right.
The appraised value is what you pay taxes on. Some properties, like if it's your first year, your market and your appraised are going to be the same value. Right.
I've seen people to get that confused. Like, why do I want to protest my property taxes? Because, I want my house value to be, as much as I can possibly get it. And we have to explain to them that the market value and the appraised value are two completely different things. You want that appraised value to be as low as you can possibly get it because that's what you're paying taxes on versus what you sell it for on the open market. That could be a completely different amount.
Right. And also, um, you want to get that market value down below the appraised value to lower your taxes. Because the appraised value is what you pay taxes on.
Mm-hmm.
So because we're protesting the market. So if I protest my market value and I send in, repair estimates and pictures, and I show that, I really believe my market should be lowered to a certain value, and that goes below my appraised value, that's going to lower my taxes. But if I just have the market lowered and the appraised value stays the same, that's not going to change my taxes. But I would still recommend protesting because maybe you will get it below the appraised value. So,
Protest, protest, protest. Regardless, protest. Send that paper back in and protest. It doesn't matter. Protest, protest, protest. So
that's what I'm saying. And about it's hard to explain, but with the IRE, but it's just to help, property owners that there's no exemption on there. And so they
mhm.
can apply for that if it's after January 1 when they purchased. And so what we'll do is if they apply for it, we'll actually send a letter and say, well, you have the benefit of the previous owners for that year. And we grant it the following year. So
Gotcha. Okay. I believe those were all the questions that we actually had for today. Tomorrow, we're actually having a presentation presented by Lone Star Legal Aid about property tax foreclosures, what that process is like, and what can you do to help avoid foreclosure, what your rights are as the property owner, what the process is like if you do find yourself in foreclosure due to property taxes. A lot of people unfortunately end up in this kind of a situation when they've got that deferred property taxes and people don't know that they've been deferred, like your mother, grandmother, uncle, whoever has had that deferral for 5 years, and they don't know that 180 days after the person passes that all of those property taxes that were deferred now become due and payable. So if you don't have that money and you haven't made a payment arrangement with Shay, then you're potentially gonna be facing foreclosure due for the property taxes. So you guys definitely want to make sure that you tune in for that presentation tomorrow. Shay, did you want to kind of touch on that even just a little bit? But I know the
Yeah,
attorneys are going to get into it tomorrow.
maybe just a smidge. I know that they're going to get really into it tomorrow, but just in case someone's not able to log on tomorrow. Yeah, you're 100% correct. The taxes are always due, and they're always available for payment even when they're deferred, because the deferral doesn't change that fact that those taxes are due. What it does is it postpones the due date, meaning that instead of being required to pay by a certain time period, usually January 31st, you have an extended period of time indefinitely until that exemption is no longer on that property for whatever reason, whether that person has passed away, whether that person decides to sell. But yes, those taxes are still due even when they're deferred. Just because they're not being collected on with as much penalty and interest, they are still property taxes in which are due. So as I mentioned before, we like considering it as an insurance, but whenever you decide to move, or if you're no longer or if you decide to sell the property, or the previous owner is deceased, those property taxes will remain at the rate of interest as they were whenever they were deferred for those 181 days. And then once those 181 days, once the deferral's been removed, have been completed, all the taxes that are due are going to be due with the penalty and interest as if the deferral was not there at all. So,
Mm.
it could jump up a pretty high amount, especially if, they've been over 65 for a while, they had the deferral placed on there and they just kind of let it go and, didn't think about it, out of sight, out of mind. Or, even if it's something like, they forgot, or, if it's been years since the person passed away and, they weren't aware of the fact that there were taxes owed for that whole period of time, it is something that you need to be aware of whenever you're purchasing a new home or whenever you're trying to receive a home due to an heirship or, whatever the case may be at that point in time. But those 181 days, that's that time period that you have in which to pay with that deferral rate, with that deferred rate, as opposed to with all the penalty and interest that you would have had otherwise. So yeah, it's super important that you're aware of it whenever you're transferring that ownership over.
Can you enter into a payment arrangement like within that 180 days? So say for instance,
No.
so there are no payment arrangements. It just needs to be paid
So
by
during
that
that
day.
so during the 181-day time period, those taxes are on the deferred rate during that entire 181 days. So we are not able to create a payment arrangement on it because you cannot enter in a payment arrangement on a deferred
A
property.
deferral. Mm.
So if you mentally tell yourself, hey, I have, 181 days, how many pay periods is that? How much do I have to pay per month in order to, make up that payment? Then by all means, go ahead and make your regular payments, and keep that mentality that, you have to pay that off within 181 days. I've seen people do it. It's definitely possible. And, even if you can't pay it all off, the more you pay off, the less you'll pay on later. And that's, something that I always like to preach about because, even if you can't make the full $2,000 payment or however much it is, just as an example's sake, paying on $1,000 with penalty and interest is a lot easier than paying on $2,000 with penalty and interest. So if you can pay whatever you can pay, then, I highly recommend that you do so just to, chop it down a little bit because every little bit helps. But it's not something that we can create a payment arrangement on just because we're not allowed to do so on a deferred property tax. So,
But if somebody wanted to just make payments on it, not necessarily enter into an arrangement, they can make payments on it.
yeah,
Then not
absolutely.
Okay.
We accept partial payments. If you can only pay $100 every paycheck, then, pay $100 every paycheck. If you have the ability to pay more, pay less, by all means, go for it. But, just to reiterate, and not to sound like a broken record, but every little bit helps. And even if you're not paying it on the entire amount and you're still going to have that penalty and interest and you kind of resign yourself to that, but, paying penalty and interest on, $1,000 versus $3,000 is a really big difference. So,
Mm-hmm.
If you have the ability to do so, even if you're like, if you have the mentality that you're going into a payment arrangement, keep that mentality. Make your payment plan in your head that you're going to make these payments. We're not going to hold you to anything because we are not able to do so. But if you keep that mentality, then whatever little bit you can do will help you in the long run because that's just less penalty and interest that you'll be paying later.
I want to kind of keep in mind or kind of get people to see the full picture here and how all of these workshops that we do are all relative together and how, what's important about when, once you become a homeowner, having a will and estate plan created, what happens when you go into clearing title for a property that you own that now has multiple heirs, especially if there was deferred property taxes that was on it. How do the heirs now be responsible for paying off deferred property taxes? And what happened in the event when you've got an heir that lives there, but the other heirs don't want to pay the taxes because that person is living there. So now you got that whole little conundrum going on when you got that kind of dispute. It could get really, really crazy if all of those things are not kind of put in place and a plan is not kind of laid out of how difficult all of this can become, but can be avoided with proper planning.
With proper planning.
And the education so that people actually know. Because some people just don't know. They just assume, hey, she passed away. Those taxes go with her when she left or whatever. It's like, nah, that's not
Nope.
how it happens. That's not how it works. Or I hear people saying, oh, the county just wants to come in and take somebody's property. It was like, well, no, you got a deferral. You didn't get an exemption. I'm sorry, that's not how it actually works, because they get confused on deferral versus,
Deferral. Yeah.
exemptions. Again, the conversation we had yesterday with this lady that was saying everybody that was sitting at my table kept saying that they don't pay taxes. How is it they don't pay taxes and I pay taxes? Like, well, when you don't know their individual circumstance, they may have had a deferral, not an exemption. You don't know what the value of their property is. So it's everybody's situation is not the same. You have to kind of know what you're looking at and kind of see the whole picture in itself. So again, if you guys can make sure that you all are having the conversations with your family members, especially those older folks that have things sometimes stuck in their mind that they don't want to talk about it, but not realizing that they have to talk about it or they need to talk about it and get some things put in place, that it's important to have the conversations, and to know, you know, you may not know that your mother or grandmother had a deferral,
Mm-hmm.
that they've deferred the property taxes, and here you go, you get a tax bill from 5 years worth of taxes that you didn't know needed to be paid. So
Yeah.
it's same thing with reverse mortgages and things. Speaking of reverse mortgage, um and I said this leading all up to the fact that we've got the foreclosure presentation that's scheduled for tomorrow, but then we also have the the reverse mortgage presentation next Tuesday that's coming up. It's the pros and cons of reverse mortgage, and how do you use it, and how to not get scammed and duped, and why it is that people actually take advantage of reverse mortgages and how they can actually help sometimes. And then the foreclosure presentation is going to be about reverse mortgage foreclosures, how to avoid that process,
Oof.
but we got a whole lot of stuff waiting for y'all. So we just, it's just a lot, just everything. So if there are workshops that we don't currently offer, then please make sure that you reach out to us and let us know as we're planning for 2025 so that we could potentially get it on our calendar. I will be sending a copy of the March schedule for everybody to actually look at so that they can see what we do have coming up for the month of March, in case you are
Mm-hmm.
interested. But again, we do ask that you pay it forward and share this information, share this recording. I will be sending out a link of the recording to everyone so that they can share. And parents, neighbors, co-workers, or whomever that also feel this information is going to be beneficial, we do ask that you do share this information. So with that being said, I know Ms. Mabel is gone already, but Shay, thank you very much. Ms. Donna, thank
No
you very
problem.
much for filling in the gaps and kind of handling the chat for us. We definitely appreciate that. And for all of our participants, thank you all for joining us this afternoon. You all continue to stay safe and take care of yourselves. And we got, what else do we have coming up? Cecile, am I forgetting something? We got coffee and conversation coming up on March the 12th. Do you want to mention that real quick?
Yes, thank you, Nia. We do have coffee and conversation coming up March 12th. It's going to be at the West End Multi-Service Center. We're going to have different guests from the city and different nonprofits, including some of our AMOS partners. We will also have the Mayor's Office for People with Disabilities there and the Waste Management Department. They will be there too to answer any questions and talk to our residents about their programs and services.
And then Ms. Mabel kind of touched on real quick about the improvement district and the management district and paying those taxes. There is going to be a business property tax rendition presentation that's going to be on March the 11th as well. So for business owners that don't know that they're supposed to be paying personal property taxes, might want to tune in and get that information as well. So I was kind of shocked. I was floored when she
So
kind of
those
that. So those that is very informative. So
you would be surprised how many business owners we get calls from stating, I didn't know that I had to tell HCAD what my business was, using all this equipment for, what their value is, and they come late in the year, just completely side, like, from the side, that they weren't expecting this, and then they'll go back, up to 5 years for property taxes. So, they'll get bills for all the years that they were in business and they weren't reporting that to HCAD, and it's a lot, but it is
it is
something
a
that they
lot.
need to keep track of and be aware of. So that's really
Indeed.
good.
So spread the word. March the 11th, we'll be back here at 1 p.m. And all of the information is going to be posted onto the website for you guys to go and register. But again, I'll be sending out the calendar for you guys. So that being said, y'all have a wonderful remainder of your day in the afternoon. You take care of yourselves, and we will see y'all next time.